What's going on, y'all? Happy Monday and welcome to the latest episode of the Hashing It Out live stream. I'm your host, Colin Harper, head of content and research at Luxor Technologies. Today, we're going to be going over the usual data points, looking at hash price and some of the movements that we're seeing in the ASIC market. And then we're also going to take a look at some new blog posts that we have up on Hash Rate Index, highlight those really quick. And after that, we're going to be going into our big news articles for the day, which is Compute Norse Chapter 11 bankruptcy that dropped last week, and also Bitmain discounting its S19 Pro orders down to $19 a terahash. So with all of that said, let's go ahead and jump right into it, y'all. So last week, Bitcoin's price took a few major hits. I believe that the weekly low last week was as low as $18,200. And as a result, Bitcoin's hash price also took huge hits. We got closer to the daily average all-time low than we have since 2020 last week, as you can see right here on September 21st, when Bitcoin took that second major hit over the course of the week. Hash price dipped to as low as 7 and nearly a 1/4 cent per terahash per day. And after that, Bitcoin's price rebounded and we went back up to just above 7.5 cents. Now, all that being said, if y'all read last Sunday's hash rate index roundup, you know that this weekly low right there was about 3.8% away from the daily average all-time low, which is just at 7 cents a terahash per day. So kind of feel like a broken record here. I said it last week, but I'll say it again. Each day and each week we inch a little bit closer to that all-time low. And with all the chaos going on right now in the currency markets, I don't know if y'all are seeing what's going on with the pound. As the dollar continues to strengthen, it's very likely that we see that all-time low sometime soon. With Bitcoin's price kind of, at least I feel like, and a lot of analysts I respect, project it to revisit its 17,000 low from earlier this summer. Looking at BTC denominated hash price, we've already hit a new all-time low last week of 396 sats per terahash per day. But the good news with this one is looks like we are due for a potentially negative difficulty adjustment this week. We're about 90% done with this current epoch, and blocks are coming in at 10 minutes and 8 seconds on average. So it's looking like, according to our estimations, the next difficulty adjustment could be in the ballpark of 1.3 or 1.30% to the downside. So good news coming in there. Hash price definitely needs it. Obviously, as hash price continues to wane, we're seeing hash rate come offline, hence the slower block times. If we look at the 7-day moving average right here, we've gone down from 232 exahashes a second to 224 exahashes a second. So roughly 8 exahashes a second of hardware turned off or maybe relocating during this hash price downturn. Again, kind of one of the beautiful things about a self-correcting system like Bitcoin mining, right? As difficulty goes up and as hash price goes down, miners with lower efficiency hardware or higher costs are forced to shut off as they become unprofitable. And when that happens, hash rate goes down, and then difficulty could go down with it, right? If block times stay above that 10-minute average. So something to keep an eye on. Be nice to see that negative difficulty adjustment coming this week. It should hit, I think, sometime tomorrow. Later in the afternoon if you're on this side of the world in the US. So definitely something to keep an eye on. Going over to the ASIC price index, we won't spend too much time on this because our ASIC price index is showing still about $32 per terahash for new gen machines. I expect this to be much lower this week and in the weeks to come, as it's kind of a lagging indicator in terms of what goes on in the secondary market. Real-time pricing. All of that to say, though, prices dropped again last week, and I expect them, like I said just then, to drop even further in the coming weeks and month. given the fact that Bitmain is starting to reprice some more of its hardware, and that's what we'll cover in part of the news section of this week. So, if you've been holding out for some lower ASIC prices, you're going to get them. Who knows if the bottom is near? It's definitely seeming like it might be close, especially if you see Bitcoin's price bottom out in the next few months. And with that finished, just want to direct you to the blog really quickly. Speaking of hardware, we had a really good guide from one of our contributors, Tyler LaRoche of Bitcoin Magazine last week about certified Bitmain and MicroBT Bitcoin mining ASIC repair centers. He goes over each repair center individually and kind of breaks down, what kind of machines they usually service and whether or not they do MicroBT or Bitmain machines. And at the bottom of this article, there's a handy little chart to let you know which repair centers do which machines and also where there's overlap. There's only one overlap with HM Tech. And for some analysis on the GPU market, for those who care about that, I know most of y'all are Bitcoin miners, but this was the last article in a 3-part series about ETH mining, or I should say GPU mining, after the Ethereum merge. And we took a look at how much Ethereum's merge to proof of stake will impact the GPU market. A lot of this was kind of, rough calculations because it was a little hard to get really clear GPU data. We had to rely on Tom's Hardware, which draws their GPU price index from eBay. And it was also really hard to get a clear indication of the exact correlation between GPU prices and ETH hash price, because unlike ASIC prices, it's the GPU market is a much larger market. There's actually more applications for GPUs in the wider computing market, whereas Bitcoin mining ASICs, they're only being bought to mine Bitcoin, right? But all that being said, you can see a little graph here that shows the correlation between GPU prices and ETH hash price. The ETH hash price there being the bright red ribbon on this chart, and then the prices for the RTX 3090, 3080, and 3070 accordingly. Now, like I said, that pricing data comes from Tom's Hardware, and we get the ETH hash price data from Coinmetrics. Now, as for GPU prices in a post-merge world, the GPU market outstanding, only about 30% of it was directed towards ETH mining, the other 70% towards all other forms of computing. So a sizable chunk for sure, but not enough to, not enough to totally tank the GPU market after the Ethereum merge, right? And so from that, we kind of extrapolated a bear case, a best case, and a bull case in terms of, or a best case, a base case, and a worst case in terms of GPU pricing in this chart right here. So for the 3070 and 3080, and that last one should be 3090. I'll need to go in and correct that after this live stream. For the best case price and end of year after all of the selling has been done from miners who are no longer profitable, we expect the 3070 to kind of settle somewhere around 393 for the best case. For the 3080, somewhere around 565. And for the 3090, somewhere around 813. So go check this article out. A few tweaks I need to make some of those graphics. But you can find these on the Hashrate Index blog. And if you're interested in more of our analysis about GPU mining after the Ethereum merge, please feel free to check out the other articles in that series, which you can find linked on that article as well. All right, and now into the meat of it. The biggest news so far probably to come out of the bear market for Bitcoin miners, and that is Compute North's Chapter 11 bankruptcy. Now, for those of you who don't know, a Chapter 11 bankruptcy is typically referred to as a restructuring bankruptcy. Usually in a Chapter 11, a business can continue its operations as usual, and it files the bankruptcy so that it can restructure the business, sell assets to pay down debt, and basically come out of it intact. So a lot of media, not pointing fingers and not to get too much of the details, kind of treated this as though it was just a general bankruptcy, it seemed, and they didn't seem to hit on the restructuring part very much. So that's one thing we want to highlight here is definitely not good. It's going to be a big shakeup. A lot of miners rely on Compute North for hosting services, but it is not doomsday for the Bitcoin mining industry in North America. It's going to be a big headache and is going to take a lot of reshuffling on Compute North's side to actually sort out the debts that it owes and to continue running. But there is a very faint light at the end of the tunnel here, but that's only going to come after a lot of financial shuffling has been done. So according to this article in Digital Infra, on digitalinfra.com, Compute North's Chapter 11 bankruptcy involves about $128 million of long-term debt obligations. And they mention here that part of this bankruptcy was triggered by their primary lender, Generate Capital, not holding or not supplying them with any more credit. Something to add to this, which they talk about in this article, the other thing that Compute North failed to do is secure long-term PPAs for their power purchasing. So in their hosting agreements with big miners like Marathon Digital and others, they have set they sell their electricity to these miners at a set rate, but Compute North did not lock in rates with the power providers that they are purchasing power from, namely ERCOT in Texas, and also I think MISO for Nebraska and South Dakota. I could be wrong about that. But all of that said, essentially, power prices for Compute North went up as power prices are going up all around the world, and now they can no longer make money or a decent spread selling that power back to guys like Marathon Digital or Compass Mining or the other miners that host with Compute North. And also, obviously, tied up in this is hash prices declining, right? So even if their PPAs even if they did have PPAs intact with some of these power providers, then they wouldn't be able to make as much on their margins as they were in 2021. So getting into this kind of really long form article, it's very comprehensive. I recommend y'all check it out. Kind of just covered some of these extenuating factors, like Generate Capital halting its funding. They agreed to lend up to $300 million in project financing to pay for developments for Compute North's facility. According to this article, of this total funding, only $101.4 million is currently outstanding, and Generate Capital decided to pull the plug on this funding in Q2 of 2022. Now, this funding would have gone towards developing some of Compute North's currently are partially operational facilities, namely King Mountain in Texas and Wolf Hollow, both of those in Texas, McCamey, Texas for King Mountain, and Wolf Hollow is in Granbury, Texas. And it has 2 data centers in development, one in Minden, Nebraska, and the other in Corpus Christi, Texas. A lot of megawatt capacity that would be going into these developments, and after Generate Capital pulled the plug, they could no longer begin building out these facilities, which obviously put the miners who were going to house ASICs at these facilities to put them out of a home. Now, Compute North is no longer generating any sort of revenue, or what they forecasted for revenue on those data centers. They could not actually reap it, hence adding to the problem of them slipping towards insolvency. Or I should say bankruptcy. They're not insolvent currently. We will have obviously more info on that as this bankruptcy proceeding goes on. Looking at this handy graphic, which I need to figure out where the source of this is. I assume it's Compute North. I've seen it in a lot of places, but I haven't seen anyone actually give a reliable source for where this came from. This shows you just how many subsidiaries Compute North has. Some of these are joint ventures with miners like Marathon Digital. The others are joint ventures, I believe, with some of their either their borrowers or their lenders or energy providers. And as you can see, there's just a lot. There are a lot of chefs in the kitchen here. Way too many. Some might say way too many operating companies and different subsidiaries. and obviously a lot of data centers that they were building out in the bull market and into 2022. And now that hash price is depressed, power prices are going up. It's just no longer tenable. So what's next for Compute North in this filing for bankruptcy? Well, they're going to work obviously to pay back their primary debtors, those with secured loans for them. And I believe, according to this, like this article said up here, they've got about $128 million of long-term obligations. 99.8 million of this is in a secure promissory note to Next Ezra Energy. 21 million is due to Marathon Digital, and another 7.47 million is due to Foundry. In addition to all of this, Compute North owes about 18.4 million to unsecured creditors. So that is a total of 146.7 million in outstanding obligations. Now, Compute North will do whatever it can, obviously, to try to repay those debts, and that might involve selling some of their data centers, selling other assets, or potentially accepting a buyout from someone who is willing to take on all of that debt and restructure the company. Now, according to this article, Generate Capital took control of Compute North's Kearney, Nebraska, and Wolf Hollow data centers, and also took control of bank accounts owned by Compute North, which contained 23.6 million. Again, this is according to this article. There are no sources listed here. I'm going to hopefully verify this in a post that I plan to publish on Hashrate Index tomorrow, and try to figure out where they dug up all of this information. It's probably in the public domain. Just have to go digging for it. So all of that said, to kind of wrap up discussion of this bankruptcy, it's not the end of the world for Compute North. They can probably make their way out of this, but it's going to take a long time, and it's going to be a long slog for them, and will probably involve them selling and relinquishing some of their data centers to whoever's willing to buy them. And with that covered, let's go ahead and go to our other top news item for today, which is Bitmain discounting some Bitcoin miners in an already depressed market, as this CoinDesk article loves to point out to us. Now, some of y'all might remember Bitmain discounted its S19 XPs by about 30% a few months ago, or July and August orders were discounted by about that much. And it looks like Bitmain is taking a similar haircut on its 100 terahash S19 Pro models. So Bitmain announced in a tweet on Tuesday that they were dropping these models by about 30% to $19 per terahash. You can see this on the Bitmain shop. As far as I can tell, this is for any order quantity, but the discount only stands for up to 200 machines ordered. So that's $1,900 per machine, and that is a pretty steep discount. For those of you who have been tracking our ASIC price index, like I said, where you're listing right now, or from last week, the average listing price was about $3,200 for a machine like this, or $32 per terahash for a new gen machine. And to kind of give you some real-time data on what this is doing in the secondary market, we can already see some repricing on Luxor's brokerage arm, our ASIC trading desk. So we can see one lister, for instance, selling Antminer S19 Pros, listing at $21 per terahash. Some of these are obviously still pretty high, like we see another seller listing theirs for $28.5 per terahash. But and we see some others listing some S19, just base S19 models for $20 a terahash. And then also similar hardware, not Bitmain, but MicroBT, WhatsMiner M30S going for $23 per terahash. These prices are still a little bit high compared to or some of these are much higher, and some of them just a little bit higher than Bitmain's. Like I was saying at the beginning of the stream, I definitely expect these prices to come down over the next week and over the next few weeks as the secondary market reacts to Bitmain's primary market repricing these machines. Now, all of that said, with Bitmain dropping to $19 per terahash, if my memory serves me correctly, that should put us into all-time low territory for these machines in terms of pricing. Yep, I think this will probably do it. According to our ASIC price index, the all-time low listing price for new gen machines in April of 2020 was about $20.87 per terahash, and Bitmain's most recent haircut dips below that to $19 per terahash. So as I was saying, I definitely expect us to visit that all-time low sometime soon, probably before the end of next month, if not sooner. And yeah, the fire sales just keep on coming, guys. Doesn't mean that they can't go lower. You know, if hash price continues to stay depressed, and if we get a new all-time low and lower for Bitcoin's hash price, as I think that we will, then, you know, it's likely that we see lower prices than this $19 per terahash still. Obviously, all of this is contingent on whether or not Bitcoin continues to be in a bear market. If it goes bull mode next month, then all of this analysis is kind of into the waste bin, right? But, you know, that's not looking very likely judging on macro environment right now. And all right, y'all, with all of that in the bag, that concludes this episode of the Hashing It Out live stream. Thank you for joining as always. We're here at 11 a.m. Central Time every Monday, unless there's a holiday or I'm on vacation or something like that. And we usually shuffle it around, or we'll let y'all know. But all that being said, please throw us a follow on Hashrate Index and Lecture Tech Team if you haven't already. And if you would like to see more analysis like this in written form every weekday or every weekend, and sometimes on the weekdays when I get around to it, please subscribe to the Hashrate Index blog, Hashrate Index newsletter at hashrateindex.com/blog. With all that, y'all, have a great week. Happy hashing. Take it easy.